Hi, it's David here with Futures Trading. I'd like to welcome you to the channel. Fate has brought you here. Please take full advantage of all of the information. There's a lot here. I'm going to cover quite a bit in this video. I want to let you know that you are in the right place. I know a lot of people on YouTube claim they're reading price action, but the chart isn't moving. The key word is action. So it needs to be something taking place. And I want to make sure that you understand I'm offering real-time information here. There's a lot of real-time video. I'm going to do real-time today, of course, and most importantly is universal. So it doesn't matter what chart you're looking at. I don't care if it's stocks, forex, futures. It's going to work on all of it. All right, it's universal, so that means it's applicable to all cases. Really important that you get that. And thank you so much for coming by. If you don't mind, encourage someone else to come. Try to find someone, because we need fate to bring people here. So if you know someone that really needs help with trading, tell them to come to the channel. Tell them to come by here and take a look. It may be something here for them. All right, so a lot of information on the channel here. I got a must watch list, so if you are interested, there's a lot of information here. A lot of information. I do suggest that you comb through some of this content and you'll find something of use. I'll try to cover most of it today, but there's a lot of things that I tell you in videos that is not just listed right here, in view. So you may want to go dig through some of the content. If you've never read a chart before in your life, you'll definitely want to start here. This is the only real-time identification process that's online. So I'm trying to give you something that, again, you can read in real time. It's really important. That's what's going to be happening when you trade. Okay, I want to let you know the market is not an opportunity place. It's actually a place that's going to take something from you. That's the model. And so if you're not understanding what you're looking at, you can be taken advantage of, and I don't want that to be the case. All right, so universal threshold. So this is how far the bar will pull back and then resume. The universal price action trend. If you don't believe me, I'm gonna try to go over trend today, but there's a trend in here, and there was no prior structure breaks, and they went up. And so I count the bars. I don't require that there be any kind of structure breaks, because the market, it develops trends within one bar. Okay, so you really need to know what that looks like, and I'll show you. Universal price action method. So universal price action method is a bar and a half. So we're looking for majority. I'm going to show you what that looked like as well. Now, when it comes to the universal chart scale, from left to right inside of your frame, I'm trying to teach you how to look at that hard right edge and know where potentially the market will cycle without having to look hindsight. You don't have to do that. You can look right there on that hard right edge and know right within this vicinity, okay, there's a good chance the market will turn. The suite of indicators. All right, again, I coded these tools just to help have an additional complementary tool on the chart to give you an idea of what it is that I think about the market and what's significant. All right, so the universal price action method is everywhere on the chart. Everywhere you're going to find it, but I did my job, so you don't have to try to comb through which ones would probably reward you the most. And so I made, of course, a great deal of tools just to help you with for all different kinds of trading styles that you may have. So I got single bar plots, dual bar plots, triple bar plots. Try to help you stay in it. So it'll plot the signals, try to confirm to you that it's developing as it should, and that's important. I do have some real time stuff as well, and I'll show you some of that, some pressures and some arrows, some things that flash and kind of let you know we're building that signal right now before the bar even closed. So I got that as well. All right, so now that we got that out the way, this is what I think about markets. You can take a look at this and read it. I'm not going to read it to you. The trader is taught to believe that the market is random. It is not. I have you know that it's not. Every author who writes, okay, will tell you the title, and until the last remarks, they're going to mention what the book is all about. I want to tell you the chart is the same way. It's just information. We have the reference points of open, high, lows, and close, but the chart is information, and that's all it is. And so it's important to have the trend. And of course, the trend distance will show up. It's important that you know that. So I teach you how to read the chart like literature. This is what one of the principles I look for in the chart. Majority means that the minority is compelled to follow. Okay, so they're compelled to follow. It's forced. So you will want to try to find majority in the chart. At least this is one of the principles. All right, and we're going to talk about the majority principle when we get to looking at this chart. All right, so let's go ahead and do some of this now. These are the indicators. Well, not all of them. This is not all of them. I can assure you it's not. But I paid over $200 for this price line, this floater. All right, it's a floater, and then I built the the aggression for it. And then, of course, every other tool that you're seeing, I actually built that information as well. I'm offering all of those tools for $200, so you don't have to pay $400 and $500 for one indicator. You can just pay 200 and get a whole host of indicators that you can potentially use. I do not provide Q&A for the indicators, so I'm not going to be answering any questions about the code. It's too many of them. That's number one. It's too many of them, and that's like training you if I did that. So I can't do that. All right. So it's a follow the plot process. So if you get the indicators, you got to follow them. And if you use a little bit of deduction and don't be lazy, in due time you would begin to figure out some of them, not all of them, but yes, some of them you'll figure them out. And that's the point, to try to get you something that you can learn, so you can constantly learn while you're trading. I'm not going to sell you tools that you can't learn from. I know there's a lot of vendors out here that kind of give you that experience. I'm not that guy. I actually want to make sure that you're aware, because you can lose all of your money and, of course, your mental faculties and emotional stability messing with this market. And I don't want that to be the case for you. So I'm trying to give you a lot of information. I really am. This is yesterday's information. All right. So this is yesterday information. I provide you the market analyzer. All right. So you get this market analyzer as well. It has the dailies, range, high, range, low for yesterday as well as today. So this is, of course, the prior day here, which was Sunday, the overnight, and then this was yesterday at the time that I had snapped the snapshot. Okay, so now this is what that chart had looked like when I took that photo, and then of course this is what they had did that day. Now those ranges, now these ranges are free, and I'm gonna tell you what the times are. I got some other free stuff I want to give you in this video as well. The time windows, this range right here is 12:15 to 1:45 Eastern. All right, Eastern Standard Time, AM, in the morning. And then of course this one right here, 6:15 to 7:45 a.m. in the morning. All right, and you can project that forward. And so they played above the threshold. So the pivot range high, pivot range low of the Sunday session, the overnight, moving into the next day. This is what they had did. They had kind of just hammered down. I went over that information on yesterday's video, so I'm not going to do it in this one. But if you would like to go back and take a look at what it is that it did, and I combed through it fairly well. I mean, as far as the detail side of it, I wanted to give you a lot of details about how they were progressing and how they referenced that information at 9:30. But yes, this is yesterday's activity, and they managed to move up. All right, so now let's take a look at this is another chart that I have that I look at occasionally, and we'll talk about these little acronyms in here. But the market analyzer, again, this is what's provided to you. Okay, so you get this market analyzer, and I plot the yesterday's level, which is this information here. This is from yesterday. Okay, activity, and that's where the levels had ended up. Okay, now this is the pivot range high, pivot range low of yesterday, which is significant. Significant. Now in the prior photo you just seen, it was over here. Okay, so you can pause the video and rewind it. You would have seen that these prices that was over here, of course, it was 9:30, and the market progresses, and then once it progresses, it calculates, and so the yesterday prices, was over here, but once the day finished, they end up over here. And so now today, this morning, so this will be important tomorrow. So when you go to trade this morning at 9:10, and I'll show you where they're currently at. So this may not reflect directly what this snapshot is when I show it to you, because again, it's dynamic. It changes as the market moves. But when the day finish, it of course lands over here, and then that way you can reference that information tomorrow and get your bias. Because I know a lot of people are looking for the daily bias. That's what they want to know. Where is it that the market may trade in a day's activity? And I'm trying to give you an idea of how to begin to gauge it before the day even kind of gets on its way. I want to give you an idea of how that looks. And again, you're provided this information. You're given this market analyzer. 9:10 this morning, I took this snapshot. Okay, we were right here at the pretty much located right at the bottom of this range. Okay, so right at the bottom of this range here, we were located down there. Now let's take a look at what we're doing currently. Let me just kind of move this out your way. And again, we were over here. I didn't put the arrow in that snapshot. I forgot to do it, but we were over here, located right at the bottom of that range. And yeah, when the market came up, well, not came up at 9:30 when they begin to move all fast because that's what they do. Try to make the bars big so you can't cover them. And so when they do that, they, of course, they try to make sure that the risk is just not, proportionate to your reward for the most part. Because oftentimes they'll make the big bar and then don't want to go any further and kind of come back and draw down on you. Trade long enough, you'll understand stuff like that and kind of look for it. But here we are here. All right, here we are here. There was a trend. There was a trend. They didn't break trend. We're gonna go over that. And they kind of did what they did yesterday. They kind of did the same thing. They did, but it's okay. But here we go. Just went right up through that high, came back in that range. And again, these time windows are very significant. This was yesterday's activity over here. Okay, so let me kind of move this here. This was yesterday's information here when they did that back and forth at 9:30. That was that range there, and of course they played that information this morning. Went up there, kind of broke through that high. And again, you want to try to find those consecutive closes outside of the highs, outside of the lows. You want to try to get that stuff going if you can, if it's at all possible. And needless to say, they came back in the range and start playing the backside of that range for the decline lower, and they're right inside of the threshold. So they're right inside of that information there, which is this. All right, so they're right inside of that information here. These levels right here. They're there. So let me, you know what? Let me see if I can lock that, so that way we can get that experience there. Let's see if I can put this on the other charts here. Let me just kind of do this. So that way it's on the chart when I begin to read it to you. No, not that. We want to go here. Okay, let's take and put that there. And then we want to do this. Let's do the same to this one as well. Give me 1 second here. All right, do bear with me. Try to do all this in front of you so you'll know there's no market replay and all that stuff. I don't play games. All right, so I'm here to like really go in and show you that it's simple. It's not hard. So I'm gonna try to read some of this to you. And so let's go with the daily. Let me show you the daily so you can see how the price levels are inside of the market analyzer. Okay, so that's that pivot range low. They're kind of covering up the pivot range high right now on the daily, but that's that information there. Okay, now this other indicator, this is another indicator, and even that I'm gonna tell you about the constant line indicator because that's free and you can have that as well. But this other indicator comes with your indicator suite. So when you buy the indicators, this right here, this zone right here tells you where the bar will probably not close. I want to say that to you, not close. So we're not looking for price to close outside of here more often than not. It just won't do that. And so you get an idea of what your daily bar will look like. All right. So let me just kind of put this in view for you. All right, so clearly, they can come down into this threshold. Well, they can definitely do that. So we're looking at a bar that's roughly this size every day. Okay, well, not every day because it's dynamic. It changes. It'll give you the reference point every time another bar comes in. It'll tell you, hey, this is what we're looking like now, and so that way you can put it on any time frame of your preference. I've shown this in other videos with the 1 minute. I don't have it on the 1 minute now. I just wanted to show it to you with the daily with the market analyzer. So you can put it on any time frame you want. And again, it's a dynamic zone. It takes the market's activity and give you a reference point that, hey, based on their performance, statistically, this is what your next bar will possibly do. Okay, and that's more often than not, it will not close outside of that zone. I really want you to understand the power of that because a lot of times when you take a position, you want to know whether or not it'll rotate, whether or not it'll draw down on you. This zone right here, I want to say this, you won't find this nowhere else online. It's a universal concept that I've came up with years ago, and I want to let you know it's very, very important. You don't want these guys close. Well, you can get them to close outside of it, and shit, they do that. That's really significant. But oftentimes, you probably won't see them close outside the zone. You probably won't. All right. So, if you're in a position fading the market, you don't want them to close outside that zone because it will definitely start running against you even more so. And you can watch prior videos to get an idea of what that looks like. All right. So that's what we did. We kind of shot up there and now the lines that you're seeing here on the right side of this, okay, on the right side of the axis here, that's the constant line indicator inside of NinjaTrader. I'm gonna go in this list and let you see that's that indicator. So you go here, and that's this indicator. All right, so you get that indicator there. and just go ahead and plug in those numbers. Okay, the numbers that you would need to plug in. Now I'm gonna tell you what they are for this information. The target is always the 55. So we're trying to get to the center. Now, most people, when they count, they do 1 to 10, but the numerical scale actually starts at 0. Okay, so 0 to 10, 5 is in the middle. So that's the means. They're always trying to get to the mean. So it's really important that you know that. So they hit the 550 here. They hit the 550 here. They may want to climb up some more. I mean, they closed above here, so they may end up here into these clusters, and the clusters are, of course, 150 to 250, 15, 25, 55 in the middle, and then 85 and 95. So they may get up to here, just not today. I don't think they're going to close outside of this zone today. I doubt that. But up here at the 85, 95, that's where they're potentially going to head. If not, they're going to come right back down here to this 55. They're going to rotate back down. So you can be on the lookout for either. And they're kind of sitting in the middle right now. But I definitely want to let you know that you can use those levels. You can use those levels. All you have to do is get your constants line indicator inside of NinjaTrader and plug in that information. That's all you have to do. Now, when it comes to those ranges, I'm going to show you an hourly. Okay, so when it comes to the ranges, they're robust. This is an hourly chart. I loaded about 30 days worth of data up here, and this is an hourly chart. Okay, and I'm gonna just kind of scroll through it here. And again, the time windows here is 12:15 to 1:45. That's the gray zone, and then 6:15 to 7:45. Okay, and you can put it on your hourly. You can put it on your 1 minute. I even had it on the daily at some point, some time back. But you can put it on whatever time frame you want. If you have the open range indicator, you can put it up there. That's a free indicator. It's a free indicator, so you can put that up there. But yeah, these time windows are important. You'll find that the market pretty much accumulates, right inside of them, and then all of a sudden they'll fall out of them and try to get gone, or they'll just take off, and run right through them. So you really want to keep them above the center, the center of the range, or beneath the range. And if you ever get stuck in between the two, you're going to have yourself a hard time. So you can kind of see that if you get stuck in between the two, yeah, it's not fun. That's all I would tell you. And if they're overlapping, it's definitely not fun. Like down in here, that's not fun. All right, so let's take a look at some real time. Let's go ahead and take a look at some real time and just kind of get this out your way here. We're going to take a look at some real time information here. I'm going to go ahead and do that. Now, I do have some flashing stuff for you because I told you I got some real time stuff too that I'll read it to you in real time. Not so concerned about having this in front of you, to be honest with you. I don't think you need to look at this, but I want to again just make it visible to each and every one of you who may be trading differently. So there may be some of you that are trading scalping. So you may be scalping and saying, hey, I just want to scalp. I don't want to hold no trades. I'm not trying to do none of that. And so this indicator, these indicators here particularly would help you with some of that. All right, so let me just kind of throw this in here if you don't mind. Just bear with me. I'm trying to arrange this. Just bear with me. I'm gonna slide this over a bit, and then we're gonna read. We're gonna read this chart again. Everything that I do is right in front of you. I don't mind being as transparent as possible with this information, because a lot of times when you go to do this, it's that when you're alone, when you're by yourself, and you're trying to trade. The market may make you think that it's just impossible and something that can't be done, but you can absolutely do it. And so I want to let you know the same things that you may look at and consider while you're trading. It goes through everybody's mind when they're trading. Everybody. So let me get a 15 second. Let me do this. Hold on. Give me 1 second. I want to get a 15 second. Let's get a 1 minute over here. Let's do this. Let's get a 1 minute over here. I want to read a 15 second chart to you, so that way we can kind of get as much information into this as possible. Let me just I want to make sure that when you read the chart, you are comfortable when you're reading it, that you can know that you're okay. It's going to do the same things. It's not going to do anything different when I'm reading it than when you read it. We're going to read the same things. All right. So let me just kind of put this over here. This is a 1 minute. So we're going to go with this. I'm going to turn this into a 15 second. Matter of fact, let me take, you know what? Yeah, I'll do that. I'll do that. Let me turn to 15 second. I'm trying to think. Do give me. You see, you're seeing me trying to put it together. All right, so let me do it this way. Let me do it this way. Let me bring those letters in just a tad bit more. I want to bring them just a little bit closer. This is the higher low, higher lows, lower highs indicator. Senior indicator list. Should you obtain it? And I also was trying to inform you guys about the consecutive close. Now, this is just a no touch, no close level, which is that's the universal approach. Trying to inform you guys on how to look at just different things when the market goes to turn. You just want to kind of look at a couple different things here. Now, when the let me do this. Let me kind of get something here. Let me get a threshold for this one. Let me get a threshold for this one. Let me just pull this out of screen because my indicator got a little more information on it than what I want to show online. Bear with me. I'm gonna make sure that this video is informative and that you can always reference this information because that's the goal. Try to make sure that you can get your trading to work. All right. So I want you to feel absolutely comfortable with trading. I don't want you panicking. Don't want you having a hard time with this stuff because it's really not that. You just got to slow it down. That's all. Just slow it down. Take your time. Don't do too much. Okay. Do set some targets and definitely emotionally for yourself. Try to make sure that you emotionally are safe when you trade. You don't want to be in a mental or emotional state where you don't feel comfortable. So make sure when you trade that's how you're able to interpret the information. I know we're always exercising real time. I'm trying to get a clock now. We're always exercising real time, and so when we experience that information emotionally, it can take a toll on who we are because we're watching every tick for the most part. Definitely those that scalping. And so you got to try to protect yourself emotionally. It may seem like I'm rambling a little bit, but I want to tell you that that's a necessary component of trading as well. Like you got to make sure emotionally you're insulating yourself when you're doing this. All right, so off the bottom, let's go ahead and start reading some of this real time. We're looking for this. All right, if we can get it, it may not show up all the time. It just may not. And of course, I would prefer the first bar to be green. Now I just want those lows higher if I'm trying to go up. Now if I'm trying to go down, this is what I'm looking for. Now it it doesn't have to happen all the time. It just doesn't have to happen all the time. It really don't. But should it? I'm very much excited about it if it can. Okay. That's what I'm looking for. Just that simple. Now, I prefer the first bar to be red or the second one. Now, should that be the case, just down here it was the case. So let's kind of do this just for illustrative purposes. We're going to do this. I'm going to do that. And then, of course, with this here, I'll give you a lot of information. I want to make sure this is a video you can always reference. Okay, always reference. Say, man, that's how it's supposed to be. Something easy, not hard. You don't want trading to be hard. There's a lot of things I can tell you about trading to make it real easy. But let's go with what's free. Let's go with what's free and what's right in front of us all. All right. So should it turn the corner? All right. So once it gives you the three, okay, we're just gonna take what's in frame. I'm not gonna look hindsight. Okay, I'm not doing that. So let's go do this. And that threshold is important. So let's go ahead and cover this. They're coming down towards the center of the chart. I'm going to try to go over all of this as fast as I possibly can so that way you can know without no problem you can trade. So let's just kind of throw this in here because they're coming down pretty quick. So let's do this. That's the center of the chart, give or take. Okay, give or take. Now, again, the chart, it moves. I got a chart scale, but I don't feel like going to grab it. So let's just kind of let's make this blue. All right, let's just make this blue. Okay, this is the center of the chart. As long as they're above the center of the chart, they can pretty much go back up. All right, now this the lower portion. We'll just use our zone for that. Now this is the upper portion of the chart. So we'll divide this in half as well. Okay, now if they stay, pretty much beneath here, they can come all the way to the center. That's what we're concerned about. Now they managed to get above our zone here. Now, if we were going with the three, which we are, they got above that. So that's not okay. They came back with it, but I'm not excited about it. I need it to happen first, and that's with the H. So wherever you're seeing the H, we're looking for this. Okay, wherever you're seeing the L, we're looking for that. That's what we're looking for. We're just looking for three. Okay, so you had an L here. They kind of dove down into it and then popped up. They couldn't give it to you here. This was the one here, that threshold. We're going with the universal threshold. That H is there, but they didn't want to give you anything to the downside. They did end up going higher here. And then, of course, when they came back, they tried to respond, but it didn't quite work. Okay. Now you have it even here, which is almost the equivalent of this. So you go with that green bar and just know, hey, that zone is important. And oftentimes they will hit it. They just absolutely will hit it. It's the bully move. They're coming. They're coming back. I promise you. There's a good chance they're going to come back and bully you. They're going to try to scare you out of the trade and make sure that you're not around for the move. So up here, this actually happened off the red bar. I'm gonna measure it and make sure it's okay. Now remember, they're coming down towards the center of the chart, so they can't rotate and go back up. I want to say that to you. So let's see. We're gonna measure this. I'm gonna get over there in just a second. Let me just kind of lay some framework for you. What's in frame right here? I want to lay it out for you. High 98. 97. So they came in lower, and these are lower as well. So that worked out. All right. And as you can tell, okay, as you can tell, it didn't close above it. All right. And so there's your decline. All right. So and then it got back down here and didn't want to close beneath. Now let's get over here and do some of this information here. Now they're pulling right back into the center here. But if they're going to go up, these are even. That's why you're not getting that L. That's why you're not getting it. But I'm going to just put this here anyway. All right. Because I'm telling the indicator I want it to not be even. I don't want it even. So that's why you're not seeing the L. That's why you're not seeing it. You had it here. You had it here. Okay, so you had it here. Okay, they're definitely still bullish. I told you if they're above the center of the chart, and they dove into it right here on this bar. They dove into that threshold. That threshold is really important. We talked about the market analyzer, the range high, the range low. We talked about that. That's what this threshold is. Okay, now I'm not going to release the specs online, but if you can figure out what it is, then go with it. All right, I just want to give you something. All right, so that L is there. There's that threshold. They leaned into it and then they popped. They couldn't quite get it to go here down anyway because they came back up and decided to change their mind. They tried to rotate up there and tag it. They did. They got close. It just didn't go all the way in, and then it pushed down a bit, but then they turned the corner. Now here, that's not it. Okay, that's not that scenario. But the L came in over here with these three. So the red bar and the two green bars, the L did come in. They just couldn't get all the way back here. All right, so they didn't make it all the way back here, but it did come in. All right, so I did tell you that that's not it. The thing up top, that's not it. Because I want to make sure that it comes in fast, like really fast. I wanted to come in fast. And they did not make it. They didn't make it up there fast enough. All right, so let's just turn this green. Well, it don't have an L on it, so I'm not going to worry about it. All right, so that's all. That's all. It's just that simple. And here, same scenario here. You kind of had that same thing. You have the three. Yeah, it's not the bottom. It's not the turn. It's right here. 1, 2, and that's 3. They pushed into it. Okay, with that green bar, they pushed into it, and then they began to move up. You got to just, again, try to map out some of this information when you're trading. Try to map it out. Take your time. It'll show up sometimes. Not all the time, but it will show up sometimes. It will. And should it do that, you may be okay. So now we have an L here. Hope you're paying attention. I'm trying to make sure that I lay all this out well. It's a little further back because it came in. Let me see. Let me check this low. Let me check this low and see if it's lower than that one. 98 and a quarter low. You know what? They're even. That's fine. That's fine. It's pretty much same thing. Pretty much same thing. We'll go with it. So it came close, just couldn't make it all the way back here, but that's okay. All right, so break of new high. We don't want to see them come back. We really don't, but it's hard for them to give the consecutive closes outside of the high. All right, so right now they're trying to work on this scenario. They're trying to work on that. Okay, now if they can get that move right back above this high, that's not exactly that. It may be a chance for it to keep going. All right, just maybe a chance for it to keep going. But that's not the case. They're actually coming back this way again. All right, so now we would do this. All right, so there's your H. All right, and again, just in real time, just want you to be able to read it and look at it and say, hey, that may work sometimes. Nothing I would tell you will work all the time. I want to go ahead and say that. That's my disclaimer for you. Nothing that I would tell you will work all the time. It just won't. All right, so they fell into our zone with our L. Okay, we got our L back here. Let's see if it'll keep going. So here's our L, and there's our H. Okay, let's see what it would do. And again, the center of the chart, let me just kind of adjust this just a hair. Okay, the center of the chart, the upper part of the chart is roughly right here. Now, if they come under here, they can begin to sell down. Let me just kind of project this forward. This will be our lower portion of our chart. I doubt they'll get back down here right now. That'll be our lower portion of our chart. And again, this is a 15-second chart. The 1 minute, it has a trend. I don't like this turn. I believe that they can absolutely get through it. I just don't know if they'll do it today. I don't know. All right, so they're going right back through there. They came to our lower threshold here with our L. They came right to it. And there's your risk. You don't want them closing beneath this threshold. That's bad. They can go through it. Like here, they closed above this threshold. They can go through this high. Don't take that short. Please don't take that short. Them guys will come right back and blow that high. Don't do that. All right. So the high here is 0750. High here, 0750. So they kissed it to the tick. Absolutely to the tick. Please don't go down. There's a good chance that they'll turn around and go right back up there. It's just that simple. And I'm using what's in frame. What's in frame. Again, I told you I'm gonna try to teach you how to read your hard right edge where the market can turn at right here. Don't worry so much about, see, I told you I'll blow that high. Don't worry about so much what's happening to the left. Don't worry about that, because that's not the thing that's going to stop you out. Okay. Anybody that want to tell you about the hindsight effect is not, they're not equipped to do this in real time. It's important that we talk about what's happening right here. This is what's going to stop you out, going to stop me out. This is what always stops anyone out. So what's happening back here is not always significant per se. It just depends on how relative it is to the real movement. That's all. So when it comes to fading pivots and wanting to counter the market, make sure what's happening right here is in relation to that information. Make sure that it's relative. All right. So this didn't work. So let's just turn this blue because this didn't work out. Make sure that it's relative. I want to tell you that. And that would help with the emotional and mental stability of trading. I want to tell you that. That's important. You better protect that. I don't like doji, so I wholeheartedly believe that they'll come back. I do. But I'm going to put this here. I'm going to leave it blue, though, because I don't like dojis. I just don't. But there's your H. They gave us that scenario. It's just, it came in second this time. It was first this time. Now it's second. Don't like dojis. They're back into our threshold. Now they can go under this bar, which they did. They can go under the bar. It's the threshold that I'm more so concerned about. Now they close beneath it. So let's see how much further they can move. Now the chart has adjusted a bit. So here's our center of our chart. Let me move this. This is the upper portion of our chart. Let's kind of just drag this up here, just a hair, about right there. And here's the center of our chart. Now I'm not going to move this, but you get it. Okay, so you get it. The lower portion of the chart will be right about, let's just do something like that. Okay, so the center of the chart is roughly here. Okay, so now they can stay down if they want. I did tell you I don't like this bottom on the 1 minute. Now I'm just looking at the 1 minute and I'm telling you right now that this is not okay. All right, this is not okay. So they can come down and stay down if they would like. Let's count our bars. That's the next thing you'll want to do. Make sure that you're comfortable. Make sure when you trade that you know that it does the same thing all the time. That's 1, 2, 3, 4, 5, 6. They only need one more, and that would be 7. Once we get our 7, I'm going to take a moment. We're going to look at the 1 minute, kind of talk about that 9:30, and then we'll come back and see where is it that they are. Now, here's the center. This is the center of the chart. So you got to expect some kind of rotation back that way in some degree. It don't have to stay up, but just it can respond. So you need to know what a response could potentially turn into. So I told you if they stay beneath here, they can move to the center of the chart, and they did that. Now, let's see if they want to like get back up. Now, if we're going with the threshold here on this turn, I believe they just closed beneath it. This was the threshold for that bar. They just closed beneath it. Yeah, that's not okay. They closed beneath it, so yeah, they ran it. That makes sense. They ran it because yeah, they didn't supposed to do that. They didn't supposed to do that at all. Now they're hitting the threshold on this L here. Now this is the L here. Let's take and do this. Don't want to be before you long, but I definitely want to give you a new trader something to look at, something that's easy, something simple, something you don't have to fight. You don't have to fight to get the trade to work. You don't. They do chop. I want to tell you that they chop. That's the threshold there. They should reach into it and go back down. Hopefully, I know they're at the center of the chart, and that's what's going to make it a problem. But they hit this threshold here. Here's another L. Let's go with this. Let's kind of mark this out and see how this play out. They're kind of on top of one another at this point. That's another L. Let's see what they're responding here. Let's see if they'll respond here. I see that they slowing down. You see if they can turn. We don't want them closing past here. I don't like this turn. I think they can get through it, but we'll see. Now, this is the L that came in because of the information here, because of that. All right, so keep that in mind while we're doing this. Just keep that in mind. That's what we're trying to look for. We want the higher lows or the lower highs. I'll try to draw us another one as the chart moves. So we're looking for this. Okay, want this going on. Okay, for the up, and then we want this going on for the down. And try to put it in view so that way you'll know what we're looking for. If you're new, don't know anything about trading, you're just trying to find something like this. And again, if you know anyone, they need a little help, tell them to come here. Tell them to come here. I'll read it to you in real time. And I don't have no problem doing that. I don't. I've even traded the account live on the channel too. You can go into the playlist and take a look at the live trade videos. I've traded the prop account. I passed prop accounts in 20 minutes. I done a couple of them. I did my business account on here. I did all kinds of trading over here, holding positions for a long time, scalping. I done did it all for you guys. Basically, just using the no touch, no close method, the universal approach. I've done that online. I haven't done all the universal concepts at the time. I was just trying to introduce that particular aspect. So you'll see in that video, that's all I was using, trying to get the trade to go. And so you'll see me take losses, wins. I even done one for 1,000 ticks. Was in the trade for a whole 1,000 ticks. It's not hard to trade. I'm trying to help you understand that it's not hard to trade. You can just take your time. That's all you got to do. So they left the building. They did touch this zone before they left with the green bar here. They touched it after they made that third one. They kind of leaned into it. I told you I don't like dojis, that they should go back up there. I don't like that. So you can take that with you. That's like a little nugget of information I want to give you. I don't like dojis. I don't do them. So here we go. That's 1, 2, 3. That's those lows. Okay. Like that. Get the green bar. They leaned into it and then they popped out of it. Let's see what that response will be here. I did tell you they'll rotate at the center of the chart. Okay, so I'm trying to give you just, again, a lot of universal information. They came into our threshold from over here with the L here, and they made another L. Now, this one didn't work. That didn't work. So when they came down, you're supposed to try to grab it in here, for the most part, because I told you most of the time they'll hit it. Most of the time they would hit it. But if not, let's just say you took it once this doji came in. Again, I don't like them, but once that came in, let's say you took it and took it like right in this area. If you see this bar close that, beneath that threshold, cut the trade. Don't have to stop back here. It's just that simple. Get out of the trade. Don't hold it. Even if it would have took off and worked, okay, catch the next one that would, essentially hold. Don't trust me on this. Just take my word for it. Don't stay in the trade if they close beneath that threshold. Don't do it. All right. Just want to tell you that. Take my word. Just take my word on it if you don't mind. I'm trying to read it in real time so you don't have to, because I know with trading, you don't want to have to trust, or at least not the person that's telling you the information. You want to trust the market, because the market is the only one that's going to reward you. It's the market that's going to give you the money. So I try to read the videos in real time so you can develop a relationship with the information. And then from there, your relationship with the market will flourish because you'll understand the market. Because the market is just a sophisticated model of who we are. It just like us, it envisions where it wants to go. And there's several thoughts that you could have on the way to what it is that you would want. And you're adapting along the way, because that's what we live. We live on the hard right edge of life. That's what we do. If you don't believe me, I talked about that in uh, trading between knowledge and naivety. I talked about that there, how we live on that hard edge of life of not knowing. So we're only learning and discovering. That's what we're doing. And so the market does the same thing. Okay. It knows what it wants. Now it may have to take several steps to get there, because it's encountering the unknown as well in some degree, because there's other people that's placing orders, and then collectively it reflects itself as one idea. So just want you to be aware of what's in front of you. It's just like you. It's kind of the same thing. All right. So we did that. Let's take a look at the Let's take a look at the 930. Let's take a look at the 930. Again, I just want to make sure this information finds you well and that you can get your trading to work. Oh yeah, so here we go. Yeah, this is what I wanted to tell you. Yeah, these guys, yeah, let me get a draw tool. Let me just bear with me. I want to get a draw tool real quick. Draw two, draw two, draw two. Okay, so here we go. Hope this information finds you well. And again, this is a reference video for you to always go to, because I'm not going to be doing a lot more videos. I think I've exhausted enough information to get you where you need to go. I think I've covered enough. I do. 1, 2, 3, 4, 5, 6, 7. So we're trying to find 7 bars. Trying to find 7 bars. Don't have to have any prior structure break, although that ended up kind of being the case at this point. You had a little break above this high by a tick, but that's not really what's important. Again, there's countless moves the market will make that doesn't have that going on. All right, so and you need to know that a trend can show up without that. That's a requirement everybody's looking for, and just like anything, why would they do that? You know, why would they put something there that they know you're looking for in order to take a trade? Not like them to always do that. Occasionally, it will happen. I mean, it will, but I want to make sure that you understand they'll sneak one in on you with a bunch of little teeny bars. I've told people that before. They'll put a bunch of little teeny bars, and you'll think that they're not intending to go that way. So you better be ready for it. All right. And I just want to make sure that you're aware of that and understand that that's how it works. All right. So here's the center of the trend. Let's kind of project that forward. And yesterday they did that, and we can take a look at that real quickly here because I know yesterday that was a doozy for a lot of people, but I want to make sure you're not taking advantage of. All right, so here, let's go back here. Let me get my scroll bar so we don't take forever. Then we'll do a little bit more real time and I will let you be on your way. But I did want to tell you about that market analyzer. I want you to be aware that I have that whole daily bias thing sorted out for you too. I do. We had a trend down at that bottom. Okay, so we had a trend down at the bottom right in here. They were trending down and then they set a trend to the upside. And so they didn't want to break the center of that trend. Now here, they never set the 7 bars. They never did it. That was just 1. That was 2. That was 3. Here's 4. And they all have to be lower. Here's 5. And there's 6. So they only had 6. And then they went back up. All right. So now this morning, okay, when they came in with all of this, you know, playing those games, they do a lot of that. You got, well, we got to start here because it didn't break the high yet. So that's 1. That's 2. And that's 3. So that's 3. Okay. And it never made a downtrend. That's why they didn't get past the uptrend. They went up higher. When they break the highs, okay, I've been telling you guys this and I hope you're listening to me. See if they can. This was a high here. Okay. This was a high here. When they break the highs, oftentimes they won't give you consecutive closes outside of them. You got to be careful. When they break these highs, do not fall victim to that. Okay. Now, here they did it. That's wonderful. If they can do that, just absolutely spectacular. You know that they did that. Just that's amazing. Great. They should keep right on going. And I hope this helps you. Even the more so, right at the center of the trend. Perfect. Happened immediately. That's good. You want that to happen. Let's see what we got here. They made a high here. No, they did not. See? They went up, one back down. You don't want to deal with that. Okay. They stopped again, one up, one back down. Okay, now let's get this. Let's see if they had this here. Nope, one up, one back down. One up, one back down. All right, so here, well, they stopped here. They did give you the 2. They went just slightly under that turn, which is okay. I mean, it's still kind of one and the same. The turn was here, and they pushed down. First, they pushed down, and then they did it. So it's coming from below, so that kind of makes sense. So they went under it. Okay, and just kind of keep in mind, like even here, when they broke this, try to put all this stuff together for you. You may, again, have to rotate between the information that I'm telling you. I'm trying to give you universal information that applies to any market, any time frame. Okay, they went in there and they kind of leaned over. All right, so just try to keep that in mind. Now here, even from this side, if you want to go at it from that side, they stopped here. 1 bar, 2 bars, I don't care. Just 1, 2, bam, they did it. It's from below, so they came down here and they went up some more. All right, so I just want to kind of keep you in mind of that. All right, so they reached up. That's what they're doing. I don't like this. I don't like this, but they're doing it. I don't like this turn, so I do believe they'll come back through here at some point. And they close beneath the threshold too. Yeah, I don't like this turn. They'll get back through here at some point. I just don't know when. I don't like that high. Now, if I had to pick between the two, both of them are no. Both of them are subject to get ran. If you ask me, this one and this one, both of them are in trouble. Just in my opinion, just in my opinion. So we could see it from either side. Now I'm gonna just read this to you just a little bit more, and then I will absolutely let you go. I don't want to hold you much longer. I just want you to be comfortable when you're trading. I want you emotionally and mentally uh, where you need to be. I want you to be balanced. I don't want you to be all over the place. Oh my gosh, they're doing this. Oh my gosh, and you're just all over the place and can't get a handle on yourself. I want to help you stabilize your emotions, how you approach this. I want to make sure that you're okay. All right, so this is one, two, three, four, five, six, seven in one sweep. That's pretty good. Now you're going to get the response. I told you at the center of the chart. Here come the response. Let's see if they'll pop up here and take and use that information there and then turn back over. So let's see if they'll use this right here and roll back that way. Now you have your H, okay, and this is the first red bar of them all. They didn't even want to reach back up here right away. They didn't. So they get back up here, that'll be a problem. You do, and see, this is something I hope that you're understanding. If they run away, okay, like that, if they run away from you like that, by the time they get back up here, they may have a trend back in this direction. So you can't do both. And so I want to make sure that you understand you can't do both. So which one will it be? Now, of course, they're going to rotate there at the center of the chart. They'll lift up. If they get up here and they have a trend coming back this way, listen to the market. Listen to the market. Okay. So don't let this make you think that it's okay to go back the other way. Make sure that they're willing to do it with you. Okay, don't try to take it upon yourself to turn the market. Okay, it takes a lot of money. I don't have it, and I'm certain if you're watching me, you don't have it either. I'm certain of that because now let's just say you structured bit with billions of dollars. Why would you listen to me? You have enough money to affect the market. That's why I say I'm certain that you don't have it either. Because if you had billions of dollars, you wouldn't care because you can actually maybe get it to move a little bit in your favor. And of course, you should be using machines at that point where you can get out on several price levels. It's not just you're waiting for some bar pattern. You don't need that. All right, so let's see if you'll get a response here. We got one, we got two, we got three, we got four, that's five, that's six. We got six. If they're going to turn around, maybe, maybe. I don't like what's at the bottom, but this is pretty good. Right off the center of the chart. Right off the center of the chart. This is not bad. That's pretty good. That's pretty good. Okay, so now we got seven. They can't do both. All right. Now I do hope that once they make seven, they can turn around. All right. So they had one, two, three, four, five, six. Did they do the seven here? One, two, three, four, five, six. Yeah, they had seven and then they turned around. I just forgot to count that last one. There's seven here, and then they turned. Seven here, and then they turned. So you do one, two, three, four, five, six, seven. Yeah, so then they turn. So you just kind of keep that in mind too. Don't let these guys make that trend back that way, and then you're just stepping in front of it, wanting to go the other way. One, two, three, four, five, six, and there's seven. So now they got a trend back in this direction. Well, it can't be both. It's kind of like yesterday where they did the trend, wiped out the trend, and then they made another one. And they wiped that one out too. So just try to keep in mind it can't be both. Here's the center of the chart. They couldn't get beneath it. They fell right into it, and then they turned the corner. Okay. Now I didn't go over these timing tools again because I'm not here to sell you anything. I want to say that to you. I'm not here to sell you anything, but I do want to let you know I have some feasible alternatives. Okay, so you don't have to be online buying indicators for hundreds of dollars or even thousands of dollars. I'm trying to tell you how to trade with nothing on the chart. That's why I'm reading it to you in real time. I'm trying to teach you how to read the market with nothing on the chart and just read the hard right edge, and you should be okay. Now you can use whatever tools you want to use. You can You can use the platform stuff you want if you trust it. But if not, yeah, you can have the suite. Again, all five, and let me go through it. Let me just go ahead and go through it. Bear with me, all of you who know what I'm about to say. Bear with me. Pause the video, fast forward, whatever. All five of these pressures for the new person that's new are calculating something totally different. This is a 1 second chart. And even on my 1 second chart here, let me open this up for you. On my 1 second chart here, this is my bar coloring on my 1 second chart. That IR is actually meant for, different time frames. You can use it on whatever, but there's an A somewhere in here. All right, so A right there, they try to get aggressive on the high. You may not see a lot of them because they're doing a lot of back and forth here. But I tried to code, here's an A here. They kind of leaned into it, pushed up. But anyway, had an A coming into this low. They was trying to get aggressive on this bottom, but then you had an A here and they kind of overshot it just a hair and then dropped. But anyway, the bar color in here is different. A bar color meant for the 1 second as well as the levels, and that's important because I'm trying to give you the aggression in the chart. So the aggression inside this 1 second is really important. And then of course there's these vertical rolls. Vertical rolls here, they're calculating three different things. All right, now there's rows horizontally, and this is a 5, 15, 30, and 45 seconds. So these are seconds trying to break down your 1 minute bar. And this is a 1 minute time frame, and I have the value in here for you if you want to do that. Again, the pressures, here are calculating different things. The same thing, three different things being calculated here. Horizontally, you got a 1 minute, 5 minute, 15-minute hourly. So I'm trying to give you a fractal alignment. Now the pressure here is what's making for the bar color in this monitor here, where in this chart, the pressure is trying to tell you that that bar will be red when it finished. So it'll try to get you to jump on the bar itself, so you can already have your stop behind it. Do I suggest you do that? No, but it's telling you right now, hey, that bar should be red. Well, before the bar finished, it went off, so it's actually not able to do that. It went off. You can pause the video and go back. It went right off before the bar had finished. Okay, and then I got the volume in there for you. All right, so you can kind of see what the volume is on that. But again, those are timing tools just to help you kind of get in it. That's all. That's all. Kind of break down the bar, just help you get in it. You had a small reaction here. Small reaction. They didn't stay beneath it. But a small reaction nonetheless. There was a small reaction off of that zone. That's why I'm telling you. That's why I'm telling you, hey, if they manage to build a trend back in that direction, do not be there trying to counter the market. I know they slid down there really fast and failed, but they came to the center of the chart only to take back off. They only came down there to take back off. And again, we had our 1 minute over here. So you can kind of look at all this information put together. All right. So wanted to make sure I go over some of this information for you. You want to make sure that you can read this information. Again, it doesn't matter the time frame. It doesn't matter the market. The main thing that I want you to kind of keep in mind when you're trading, protect yourself emotionally and mentally. The perfect way to do this, okay, I want to help you understand this. The perfect way to do this, you're calm whenever you're doing anything else that you enjoy, okay? Trading inherently gives you an experience that sometimes you may not appreciate it. I'll say it like that. I don't appreciate you stopping me out. I don't like it. But you still need to be able to enjoy the interaction from time to time. Okay. And the best way to do that is make sure that you learn universal information. So that way you're pretty much expecting what the universal information pretty much delivers all the time. And so there's not a great deal of variation on the consequence of it all, so on the outcome of it all, there's not a lot of variation. And we're going to go over that last one. That's the no touch pattern. We're going to go over that really briefly. But you want to use information that's universal. I want to say that to you. I may not do another video for a while. I want to make sure this information sink in. You want to do trading in a way that you could always kind of somewhat stabilize your thinking and your emotions about it. All right. So this is kind of like a mixture of psychology for you too. I'm not going to dive into a whole lot of terms, but I want to make sure that it's simple. I'm not a licensed professional. I just, when it comes to psychology, I'm not. I just know quite a bit. You want to use what will reflect in your choice. That's all. So when it comes to the consequence of it playing out, you want to make sure that it's somewhat repetitious. All right, that's all. You want to make sure some tools kind of reflect the same thing. So if you're getting indicators, they got a lot of different variations to it, you know, oscillators for that matter, something like that. Yeah, you're going to find your emotions because it's tied into the choice. Okay, so whatever you're using is tied into you choosing to use it. And so if what you're using doesn't yield consistent results, where you can't expect emotionally to be, you know, I guess at an even place. So you want to try to use something that's universal. And that's why I'm giving you the universal information. And then from there, you can use whatever you want. And of course, I have the tools available, and you can use those. And pretty much each one of them are going to yield the same kind of effect. Okay, I want to tell you that because I'm building on principles when I code indicators. That's what I do. I'm not messing with any kind of oscillators or support and resistance tools. I want to tell you that. I code indicators, I code them based on principles. It's really important that you understand that. I know you may purchase stuff from other vendors, but are they aware of fundamental functions, things that's going to always happen in the chart? Or are they basing it upon something that they may have learned from someone that wasn't using universal methods? And that's where you may end up with, some trouble. That's all. All right, so they're coming back to the center. Let's do our center again. Or maybe they'll actually stay down this time. Maybe. Can't be both. Can't be both. They're back at the center of the chart. We got to go over the no touch method before I go. We got to do that. Here's the L on the red bar. So this threshold is important. Let me just kind of throw this in here because they're back at the center of the chart. Here's the threshold for that. They're responding. Let's see if they'll jump back up there. That's all we can do. Let's see if they'll jump back up there. Now, when it comes to the universal approach, when it comes to that price action method, I'm going to give you the bull side first. Okay. We're wanting a bar, the live one, the one that's jumping up and down, the one that's doing this, the one that's doing this. We want the mid of that bar to get above the prior bar's high. Okay. We want the mid of that bar above the prior bar's high. Okay. That's what we're looking for. When it comes to the market going down, we want that live bar that's jumping up and down, the one that's doing this. We want that bar's mid. We want that bar's mid right here. We want that mid to fall beneath that bar's low. That's it. Now, what I'm going to do is I'm going to cut the mid on here. I got it on that 1 minute, but I don't have it over here. So let me cut that mid on because I want to make sure I touch on that because that's important. That's important. Then I'll let you go. I don't want to hold you long. I don't want to bore you. Don't want to bore you, but I do want to give you some information. If you're new, I want to make sure that you have a very comprehensive perspective on markets and how they're to be traded. It's really simple because once you get a handle on the simplicity of it, you can do fairly well. Okay, so now I'm gonna put the pressure up there that'll flash. Now this pressure is not on those charts. Okay, so I'm gonna put this one on here because it's not included on those charts. So I'm gonna put it over here. Okay. All right, so now we're going to get the pressure that's going to flash and let us know what's happening. So the thing that we've been looking for. So yeah, they didn't want to give anything, so they failed through that. So we have the no touch, no close pressure. I have the no touch levels up here. I didn't put the bar color in here with the no close text. I didn't do that. Okay, so it's doing it. So that blue horizontal line is falling beneath the bar's low. So it's telling you in real time your pattern is there. There should be a hard stop level. See, there it is. A hard stop level here. And they shouldn't come back past here. This should be the no close bar, but I don't know if it, I don't know because we got an L here, the first green bar. Now they're beneath the center of the chart, but guess what? They're hitting the lower. I know this moved just a hair, not too much. They're at the lower part of the chart and they're trying to lift. They're trying to lift anyway. So let's see if it'll fall through it. Now, again, it's working. It is working. It's trying to work anyway. But this threshold is important. This one right here. That's important. That green bar right here. Because it has the L under it. So this threshold is important. That's why I told you I don't know how they're going to play this one because of where they're at. Now, if they're going to stay down, if it yielded something. So I'm going to make it green because it yielded something. They dove into it and they popped. All right. So the center of the chart, again, they're kind of stuck. Let me just move this up just a hair. It's roughly right here. Okay. So that about makes sense. All right. So now let's see Let's just see what we got. Let's see what we got. They're not making it to this one. No, they're not close enough to that one. They came in, but they're not as close. They're just not. Now, it's doing it again. It's telling you that it's there. The pressure, again, this pressure is not on these charts. It's not over there. What's on those charts is my bias pressure, my bar entry pressure, the trigger, well, my bias pressure, my bar entry, bias, trigger, momentum bar, and then I got momentum bar over here, and then I got aggression here, and the trigger is in the middle, and that's what's making for the bar color. But this is the no touch here, and there's another one. There's another one that I have too. It's a range pressure one. It deals with your ranges, so your thresholds. It deals with that. It deals with that information there, so it deals with that. All right. So yeah, they're hitting this again, and they're trying. They don't want to go beneath the lower half of this chart, so they dove back in here again. They're banging their head right back into this threshold here. This with the H. Okay, we have the H, and they're back at that threshold. Let's see if they'll respond. I'll just throw this here. I don't know. I think they may want to try to get back up there, but I don't know. They're responding to this one. They're still like right beneath it. They're responding. I don't know if they're gonna break down. I'll just put this here. I don't know if they're gonna break down though. I don't know. We're gonna see. I'm trying to give you some information, some stuff you can go with, just out the box. Chop don't matter, swinging whatever. It doesn't matter. Let's just see what they do. Let's just see. Small response didn't quite want to get there. They're not breaking down just yet. They may want to. Yeah, they want to take another ride. All right, so let me just turn this blue because they went through it. Won't count it if they went through it. We got to count it only if they won't go through it. So let's just go ahead and put that back blue. They went through it, kind of getting stuck in between the two. Okay, in between the two. And again, real time. That's what I do here on the channel. Again, don't want to be before you long, but you can go through all of this information. Okay, and again, thank you guys for coming on board. I do welcome you. Fate brought you here. I want to say that to you. Do not take that for granted. Taking stuff for granted means a lack of an appreciation due to familiarity. You don't know anything about the channel. You don't know me, so take full advantage of it. Don't take this for granted. You know trading, and it can be assumed that there's nothing here because you know trading. I'm assuming that you're not new to trading, that you've traded before, and so you can, of course, cease to appreciate due to familiarity when it comes to trading itself. Just trading can make you not want to appreciate what you're getting when it comes to information. That's why there's not a whole host of support on the channel. It's not. I do the best that I can to offer information, and I know that a lot of people online, they don't come remotely close to what it is that I'm trying to deliver here. And that's, again, give you information that's universal, that can show up on any chart. That's really important. On any chart, any time frame, that's important. And I'm not plastering my face all over these videos. I'm not doing that. I'm not doing that. That's not professional because you're trying to learn. It's important. It's important that you learn, and that needs to be the focus. They're still operating right at the center of that chart and right above the upper part of this lower part of this chart. But yes, that is my time with you. And again, you're more than welcome to all of the information. So if you're new, please don't let this opportunity pass you by. Take full advantage of everything that's here. Okay, everything. Now, if you're not a Ninja Trader user, you don't need the indicators. I don't think you need them, period. But they're there. I don't want you to go out here and spend a bunch of money with people, again, who are not providing education with the indicators. And I mean education, where you can not be codependent, where you're not, essentially bound to buy another one from them because the one that they gave you just won't do it all. And so I'm trying to give you some information that you don't need my indicators, but if you want an additional signal on your chart from me that's telling you, hey man, I really like this one. When this shows up, yes. Yes, when this one shows up, yes, please take this one. And so that could help. That could help. Now, again, the universal information is the universal information. It should work all the time. Let's look at our levels here. Yeah, they've been getting fussy. They've been getting fussy really bad here. Yeah, you got the HC up here. Totally get it. These indicators are in the suite. And again, if you see something, I want to tell you guys that have the indicator suite. If you see something on the chart that you don't have, just click that link. Click that link that I just sent. Well, I sent you guys like a week or two ago. Just click that link and download that file again. and you'll have all the latest updates. Because occasionally I see things that I want to just kind of add. That's all. And so occasionally I'll put some stuff in there and add some new stuff to it. So click that link if you see anything on the chart that's new. Okay, but here I just combined the H's and the L's with the consecutive closes. That's all I did. Yeah, that's all I did. And well, I added a couple other things, but I just combined those two. So you got a confluence indicator of the higher lows with the consecutive closes. And the zone here, this is that fair value gap stuff you guys like, but I created my own version. And really, it's the level that you're referencing. It's the level with the zone that's important. Like they're up here, so you got a level here with the zone, level with the zone. That's important. You had zones in here. They pulled into them. They pulled into them. I just coded my own version of it. Again, I'm indifferent about that fellow's information. And these bar colors here, that's a confluence of the climax C3 indicator and the wick indicator. So you'll see some colored bars in here. That information is again just something else. And again, we had the gap stuff down here. There's the level. You want to put your stop behind the level. That's important. But yeah, so yeah, and see now that bar is colored. Okay, so that bar is colored. This bar is colored right here. That's important. Okay, that's important. Again, this is my version of that fair value gap. You'll be given this version if you're new. You'll be given my version, and of course one that'll find all of them in the chart. Like every gap that you want to see, it'll be there. So there's a couple versions that you'll have. You'll have this version as well as the other one you'll have. All right. So that's my time with you again. I hope you have enjoyed yourself watching this video. Do reference this information moving forward. Please, please, whatever you do, keep an eye on these prices for the rest of the day, and even these, kind of moving forward. I think the bar is somewhat developed for today. Keep an eye on that information, and I wish you all the best with your trading. Take care.